Hello, traders. Sorry about the delay in getting started today. Happy Monday to you. It's 8:07 a.m. Chicago time on the 23rd of November 2020. This is episode number 1885. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, I'm going to share something with you that I'm going to start using going forward. Just summarizes all the stuff that I look at. Let's see. This thing here. Hopefully you all see it perfectly. This is just an overview of what things look like as we come into the session today. As you can see, the market is leaning risk on sentiment today, with the overall view being that the market is popping higher. We have a trending up condition. We have basically a trend up profile, a P-shaped profile, sort of a short squeeze. With 170,000 or so. Actually, it's a little higher now because this is prepared ahead of time. And then today, in terms of scheduled releases, we have market manufacturing PMI at 945. That's manufacturing, composite, and services all at 945 this morning. And then we have Fed's daily at 1 and Fed's Evans at 3 Eastern. The overnight range is approximately 34.5 points. Versus the extent of the norm, or the limit of what we would consider normal, which is one standard deviation in the last 252 days. That's 56 points. 56 points. So given that we do have a relatively wide range overnight, believe it or not, when you test it against the last 252 days, it's still considered well within normal. Overnight inventory, 92.25% long. 92.25% long. And just so you know, the harmonics and the daily range for various products are listed in the green box here to the right. The gray box to the right. For each of these key products, the range is shown, as well as the harmonic rotation for 1 minute bars. 20 session look back is noted in the asterisk down below. So for the ES, daily range is around 58 points. The first standard deviation of daily range is around 58 points, with harmonic rotations at 8.5, which are really large. Volatility still relatively high. Again, this is looking back 20 days on 1 minute bars, RTH only. You can get the same numbers for the NQ. 238 daily range is considered normal, is inside of normal, with 33 points per rotation, which means that if you're trading this product, you need to have a super wide stop to be outside of the noise. Russell's 39 and 4.7. The Dow is 463 and 64. Crude $2.20 and 0.19. So this is a summary of what's going on. The laggards today are the metals, as you can see there, turning red. The notes, the Treasury futures are slightly off. The dollar slightly off. The euro's a little bit up. The pound is quite strong. And the Swiss franc is quite strong as well. The leader today is the Russell, up 14.7 points, trading at 1798. And that's where we stand. That's the stance for today. So let's move on to the review segment. The purpose of that sheet is to bring it all in one place and to make the review segment very, very quick, so we can get into the business of what the context and the narrative is and where we're headed. On Friday, the primary scenario was looking for a push down into 35.70 and then a squeeze through the high that we had put in at 83 and a quarter or so, 82 half, something like that. Was looking for a push through there, consolidation at the 84 to 87, which are the single prints, and then a continuation to 96. That was the first scenario. 1 second. The secondary scenario was a push down into the 7071, the low volume node from the overnight session and the prior day, and then a rotation up into the 87-ish area, and then a sell-off down into 3560 before the bounce. Here's what actually happened. This is a 4-tick Renko. 1 second. This is a 4-tick Renko, an open auction in range, just out of value. As you can see, we opened in the upper distribution of Thursday. The lower distribution in the value area was just below. We consolidated and we immediately went into the value area, the lower distribution, the bigger distribution from Thursday. And then from there, it's really looking for shorts. It ended up coming back up into this upper distribution, but overall leaning short for the session. But there was no Friday didn't give much in the way of payout until much later, as we pushed down for the first time into 2 p.m. Eastern, pulled back up and then continued lower to sell off into the close. We ended up putting in a higher low by a matter of 3 ticks or so, or a couple ticks, on what was a P-shaped profile, but in this case, the P was formed early. This profile, this would be described by many people who look at market or volume profiling as a P-shaped profile, and it's not. It does not have the same implications. A profile that starts down here, runs up, and then consolidates for the session to form a P-shape has a very, very different meaning than a profile that's up here and then falls later in the session to form a P shape like we got on Friday. This is not short covering. And so we closed near lows in what was just really a normal variation day. Pretty tight trade on Friday. What we noticed coming out of Friday is the order flow was just not clear on that day. We had a day that was selling off, a day that spent most of the session below the opening price, yet the delta was very strong. Look at the delta here. The open is way up here, which is the zero line on the delta, and the delta was positive all day. To me, this looked like it will probably poke through overnight, but the expectation is it would be back here at 35.69 at some point today, and it did that work overnight. It's currently trading exactly at 35.68, which is against the point of control of Friday. This kind of behavior where we're dropping like this on just thin air, basically price moving lower, more in the style of bids being pulled than offers being hammered. This kind of behavior here tends to happen on news, or tends to happen on some external event, and what you have here is the participation is not there. There aren't aggressor sellers coming in and hammering on the bid as you would normally expect. And so with that, it often floats back. We get a V bottom and it floats back up. The volume on Friday was relatively low versus expectations, and that move down was quite sustained. Here's the full session 30-minute, where 210,000 contracts in line with what we would consider to be normal for the overnight, and then overall we have a week high, a market that has simply bounced back up. Now the day session ended here, and then you had that half-hour period or whatever where the market continued to sell off. So we have an overnight low of 35.45.50, but overall we did get what was expected, which is a V bottom, consolidate, come back to where it came from, 35.69. And so that's where we are. And of course, the market's responding to Mnuchin pulling the plug on some pandemic lending programs that the Fed considers essential. That started the move down, and of course with the the current Senate Majority Leader Mitch McConnell recessing the Senate, it basically meant that the market is not going to see stimulus for now. So they've gone home for the holidays and deal with it. So the market responded in a way that tells us that there's just not likely to be relief, and of course a lot of relief ends at the end of 2020. So that makes the market nervous in terms of people being able to be purchasers, earnings being met, and things like that. That's the key element that's supposedly driving things. There's some questions about, I believe it's AstraZeneca's results by various experts, but who knows? We have a market that is responding to news. It's pulled back just a half hour ago. It pulled back to the mid of the session, but is still holding the upper distribution and is standing at the top. And so what we have here is a market that's coiling a little bit against in between the overnight high, the overnight point of control, the mid, and is stuck at the full session VWAP, which is an odd place to be. But in either case, we're right on top of Friday's balance zone, and so we expect the market to do something this morning, but it's likely to be choppy and slow coming into it. Looking at the big picture, and what we were able to do, I did expect on Friday, and I talked about it, and I was wrong. I did expect that the one-time framing down would come to an end. If you look at what we've done on the weekly, I've talked about this every week. On the weekly, we've had one-time framing up all the way. So on the weekly, we have a trend up going on, but on the daily we put in this high at 29.50 and we've been trending down. We've been putting in lower highs, and I expected this to break, and so I was looking for, if you recall on Friday, I was looking for the 08 test. In fact, it probably mentions it here. Yeah, the 08, this is what I was dreaming of. What I was dreaming of on Friday, the expectations we would break the one-time framing up, clear the low volume node here, and make our way to the 08, and it didn't. It ended up sustaining the one-time framing down, but we got an inside day on Friday on an inside week for the week. So last week is the smallest range week in about 5 weeks. And so this thing is kind of pausing up here and is sitting tight, and it doesn't know which way to roll. We did get the Pfizer news a couple of weeks ago. We got the Moderna news last week on Monday. We did not get much last night or for today, and it seems like it's very fitting that this is kind of going into the holiday. Basically consolidating, which creates a situation where we need to be very very cautious this week with our expectations. Now remember, this week starting Wednesday afternoon, we go into the Thanksgiving holiday here in the U.S. The schedule for Thanksgiving, I don't have it in front of me, but from memory, the schedule for Thanksgiving is that Wednesday is a normal day, Thursday's a half day, and Friday's a half day. Correct me if I'm wrong. So a lot of traders are not here this week. So expect volume and movement to be fairly light and relatively choppy. We'll see how the news kind of feeds into things. but overall, not my expectations are not very high for this week. So that's where we stand. The point of control remains at 35.57 for the composite, for the 2-week composite. And then the naked point of control above us that's important is 36.08. Those are the big landmarks. Let's take a look at what's expected for today. So today, let's turn on our stock zones. Boom. Bada bing, bada boom. Cool. What are we expecting for today here? By the way, this retail shopping season, the big, Black Friday is this Friday, and some vendors have actually started doing Black Friday as early as 2 weeks ago. It's expected to be a very light retail environment, so we'll see how that goes. We still have the Fed seat that needs to be filled. The market's anticipating that as well. We'll see how that goes. But the primary scenario here, given that we're opening right on top of the point of control of Friday, is complete chop. Overnight inventory, as I said, 92.25% long. So the expectation is we are likely to dip back into the 65, potentially 62 again, consolidate, and then punch up. And I'm looking for it to break the overnight high, the week overnight high here, and take us back up to 35.82. But I've got to tell you that I don't have very high hopes, so I expect it to get tangled at the overnight point of control, and it just sits there. Again, I'm just coming in with low expectations. If it does run to the upside, we know here, let me switch back to color. If it does run and the market does what it does, if it does run, then we're looking for 87s, which are single prints, 87s, 87s, 96, the double O's. Okay, those are key areas. Given that we are at 35.70, I would expect 30 points of range to the upside is okay, but it still is able to reach the 36.08. Again, I'm going to circle it. That's the big balance area to the upside. To the downside, this is too close a range here at 65, most likely. We'll continue to squeeze into the MC point of control of 57 is key. 57 below, and then 52 is minor, 48, and then we're looking at, I'm looking forward to this tablet that I can draw on the screen here. And then the big test area is still 41. We got pretty close on Friday and Thursday, but didn't quite get there. 41 is a swing high from early October. These are the key areas above and below, key reaction areas. Secondary, I'm looking for an open auction that squeezes up, consolidates the overnight point of control, pushes the 80, pushes the 52, gets into 87, 87, 92 area, consolidates in here and holds steady, and this sets us off. If this happens, if the scenario 2 happens, we now have the one-time framing ending at 76, and we may see a spurt, a quick spurt up into this 87.92 area before the market will consolidate. So will likely consolidate. That's the secondary scenario. Again, we're opening imbalance in range of Friday, so it's just keep your risk and your targets tight, at least to start with. I'll be here all week. I'll be here. I'm here today. I'm here tomorrow, and I'm here on Wednesday. I'm not here Thursday or Friday. There will not be a Trader Bite this Friday or Thursday for Thanksgiving, and then we're back in business on Monday. Okay. Good luck, and I'll catch you tomorrow morning. Take care.